Hello, and welcome. We are so excited to have you here today. We are so excited to talk about Green Your IRA. I am Kate Drain. I am head of growth at Raise Green, and I am so incredibly excited to introduce Jackie Logan, the co-founder, CIO, and co-CEO of Raise Green. Jackie is an infinite, has so much knowledge, and I'm so excited to learn from Jackie today about greening your IRA. So Jackie will kick this off. She'll give a little agenda about what she's going to talk to you. And then at the end, we'll have time for questions. And so some questions were submitted beforehand. And then also feel free to add questions in the Q&A section of the webinar. So without further ado, I am excited to pass it over to you, Jackie.
Hello, everybody. Happy holidays. A pleasure to be here. Excuse my somewhat rough voice. I'm recovering from the cold that's running around the Northeast, but thrilled to be here. And just a few words on the origin of how this all came about. And I want to couch this in that this is really a educational conversation, because what we found in talking to investors that are either already investing through Raise Green into various climate solution type companies and projects, or folks that are actually interested in the platform, when we were asking them about their wish list or what's important to them, or what are the different ways they like to invest, one of the things that just kept coming up is their IRA. Retirement funds are a critical part of building your wealth and saving for the future. And repeatedly, folks were saying, "Gee, I wish I could use my IRA to invest in opportunities on the Raise Green platform." And what we realized is, and in response, we would say, "But you can." And what we realized that we wanted to take this opportunity to open it up to folks, to explain to them what's available on the Raise Green platform to do just that. Before we jump into that, I will go through, a few pieces of information related to how we get to what ultimately is what's called a self-directed IRA, which is the type of IRA that you can use in order to invest on the platform. Typically, you will be able to invest into alternative assets, of which Raise Green, that's what we offer. So maybe what we'll do is we'll flip it to the agenda quickly. Next. Oh, disclosure. Let me actually, first of all, and very importantly, we take compliance here at Raise Green to heart. And most importantly, want to make sure that we are very clear with both our issuers and our investors that Raise Green does not provide financial, tax, legal, accounting advice. We are registered with the SEC, a member of FINRA. We are a funding portal, but we are not a financial advisor, broker-dealer, et cetera. So nothing that we're going to talk about today is financial advice in any manner. We always recommend everybody to get their own tax counsel, legal counsel, financial advisor. So that is just important disclosure. And so next, a few words on Raise Green. The origin of Raise Green, for those who don't know, came about with basically the idea that there is just not enough money going directly into climate solutions, and there are not enough people involved in climate solutions. So how do we bring that together? Scroll forward and Raise Green. Raise Green works with folks across the United States who are doing something in the climate solution space. You can think a new climate technology, all the way to a solar array that might be on a school in an LMI community, in an inner city situation. It's the gambit. It could be equity, it could be debt, but all the securities that we issue are considered private securities, and they are issued under one regulation, and that regulation is regulation crowdfunding. Regulation crowdfunding only came around in 2016, so it's really new and it's still evolving. And generally, the general population is just learning about its capability, but it was very specifically designed to enable small to medium-sized businesses to raise capital like bigger businesses can, and access the capital markets, and open it up to retail investors, which historically had not been able to participate in the private security market. And historically, there have been, although there's a lot of risk in this market as well for a host of reasons, there have also been amazing opportunities. And so now the playing field has been somewhat leveled through regulation crowdfunding, opening up access to capital to more folks, as well as opening up investment to more folks. And that's the heart of Raise Green, because we felt that under this regulation, we can start to attack what we think is a key issue in addressing our climate situation, and that is to get access to more folks, access to capital, and more folks involved. So high level, that's who Raise Green is. We received our license in our registration in 2019, launched our first offering 3.5 years ago. We've done 35 offerings. Over $8 million has been raised on the platform. And we have over 3,000, actually around 3,300 investor accounts. And our average ticket size is around 3,800, which relative to the general crowdfunding marketplace out there under Reg CF is actually more than 100. It's actually double, and actually 2.5 times what the average ticket size. And that's really a statement about how loyal and how focused our investor base is about impact. So that's Raise Green, and we are very, very specifically, we are a funding portal, and we issue securities, debt and equity under Reg CF, fully online, and try to make it as easy a process for folks as possible. Next. Next. So 2 words. So we've all heard of IRAs. I'm going to go through this really quickly. Basically back in 1974, the individual retirement account was created. Basically, it could invest in just about anything except for a few things: insurance contracts, collectibles, and basically disqualified persons or entities. It's basically self-dealing. But the availability to invest in just about anything existed all the way back then. Scroll forward, new different kinds of instruments were created, and over the last, I guess it's 50 years or so. And the most common one that everybody's familiar with is what we call the conventional IRA. And that is, you go to your broker, your dealer, your bank, and you open up an IRA. And typically what those are investing in are publicly traded stocks, bonds, mutual funds, and ETFs. And historically, they have not opened up investment to what we call alternative assets. And a piece of why that was the original only banks, trust departments, and regulated entities like that were allowed to actually host IRAs. And they have a fiduciary responsibility, they have a lot of regulation around them, and therefore they were kept what was available for investment in a smaller box, if you will. Then the creation of opened it up to be able to have non-bank institutions actually be custodians for for a self-directed for an IRA for IRA accounts, and thus began the development of the self-directed IRA. And self-directed IRAs, they can invest in stocks, bonds, mutual funds, and ETFs, of course, but the main focus is looking at the alternative assets, private securities, promissory notes, precious metals, real estate, crypto, private equity, hedge funds. Those are some of the things that self-directed IRAs can do. They also come in, self-directed IRA a platform that is offering their service to you. They're going to have different types of IRAs that they can offer. One might be what we call a traditional IRA. One might be a Roth IRA, another a SEP IRA, and a solo 401k. And each different platform that you might look at, or provider, if you will, may offer different components of this. Not all of them offer the same thing. Because I know there was one question that came in regarding solo 401ks. So certain self-directed programs do allow that. And the key is that the IRS has to approve the custodian, and the custodian is really behind all the IRA products. Next. So as I said, at the heart of a self-directed IRA, or any IRA, is a custodian. The most important thing to recognize when you go to a conventional IRA and you get it from Schwab or somebody like that, as we discussed, they are, they are selecting what you're going to be able to invest in. And a piece of that is they have a fiduciary responsibility as a general matter, and are keeping it within a box. And they tend to be the securities that we talked about. For self-directed IRAs, it opens it up. Depending on the provider you're using and the nature of the IRA, it can go one way or the other in terms of how wide that investment selection can be. But one of the things you've got to know is in self-directed IRAs, usually the custodian, they do not research, investigate, or recommend investments to account holders. They don't verify the accuracy of the information on the investor's statement. They don't ensure a full and accurate disclosure of all details. The point being is that, and I would just, again, is a self-directed IRA is not for everybody. It is probably for somebody who obviously wants to invest in alternative assets, but also likely has some sort of tax counsel or financial advisory. So as you look at different investments, you have, you have professional advice along the way. But it really, the point of the self-directed IRA is to really let you invest in what you want to invest in. Next. So how does it work? There are high level that I think of self-directed IRAs as being broken into two different kind of buckets: a checkbook IRA and a custodial IRA. The custodial IRA is the one, self-directed IRA is the one that you will basically have a relationship with a custodian and an administrator, who will then you will work with back and forth. The custodian will review your investments in advance of you purchasing them to make sure that they're within their own box of what they allow. Granted, they're not giving you financial advice or anything like that, but there is a step there where they will get involved with that. They will provide certain services, and the fees, they vary across the board, but some folks say that they could be lower if with a simple custodial IRA. A checkbook IRA, which came about in the mid-90s, allows you, it basically adds another piece to this, and that is there's your IRA. The IRA owns an LLC. The LLC has a bank account and can write checks, basically. And you, as the owner of this, the IRA, or as the beneficiary, you can make decisions on what you want to invest in, and just write checks to pay for it. We have on Raise Green folks that are both self-directed, custodial IRA, self-directed IRAs, as well as checkbook IRAs investing through our platform. Both function very well. But we're going to talk about something very exciting that Raise Green has, and that is that we actually have an integration on our platform with a custodial IRA named Alto IRA. And in our audience right now is Jimmy Montgomery, who comes from Alto. So if you have any detailed questions, we can loop him in for that. But high level, two different kinds. The different providers provide, some provide both, some provide just one. That is, when you look at which provider you might use, this is one of the things you may want to decide. Next. So simply said, when you pick you need to pick a provider. First, you want to educate yourself. You want to choose your provider. You want to make sure they're reputable. The different kinds of things you're going to look at are, what are the fees? What do they offer, as we discussed? What kind of customer service? What kind of assets are allowed? You'll fill out an account application. You'll fund your account. You choose and execute your investments. You'll monitor your investments, and then you'll keep to the requirements of the IRS rules. Next. For a custodial, now focusing a little bit in detail on the custodial IRA, there, because the custodian will be involved in the in making sure that whatever you're investing in gets a thumbs up. There may be some unique paperwork associated with that, whatever asset type you're investing in. There are multiple folks that are involved in that. It's the IRA holder, it's the custodian and the administrator. Could be an intermediary like Raise Green, and then there could be an issuer. There's an approval step and some manual work. We look to work with all providers if possible. And the big push out there is to make it easier for everybody: onboarding, technology, service, integrations with intermediaries. All that is happening, and making it super easy. And we will talk a little bit about the steps associated with opening an Alto IRA account, which is the one that is integrated with Raise Green. Next. Now, we're not recommending any provider in particular. And what I did is I looked around at various, who are the best providers, and just pulled a sample. But as I said, always do research in advance of selecting a provider. But here are a list of some of the common ones that came up in doing my research. And again, the considerations when you're looking at any of these are, what kind of options do they have? Do they, the traditional, the Roth, et cetera? Do they offer either or both the custodial or the checkbook? Types of assets allowed. Some of them allow more assets than others. One of the things you're probably going to think about is the simplicity, given your particular set of circumstances and how you want to invest and what you're going to invest in. Different platforms and different ways are going to make more sense for you. Of course, there are fees. The fees generally break down into 3 categories. There's the startup fee, just to get you up, ramped up. There's sometimes an annual fee for having your account. That can be a flat fee or based on the assets under management. And then sometimes there is a per transaction fee. So the key is that those fees should be transparent. And if they aren't, then that is something you would want to be thoughtful about, whether that's the platform for you. Next. So before I get into that, what I want to do is just talk a little bit. So again, this all came back to, a question of, IRAs, self-directed IRAs, didn't realize they could invest on the platform through Raise Green. Yes, Raise Green will work to support any of those providers if they're willing to take a crowdfunded investment through Raise Green. However, I can tell you that if a provider is directly integrated into the platform, it is a very different experience. It's basically comes down to, in terms of the process of making an investment, and Alto IRA is one of the things that they're known for, as I read all the different articles, is making it incredibly simple and easy for you to make an investment fully online. And so basically If you come to the Raise Green platform, which hopefully all of you have signed out for a Raise Green account, and if you haven't, I hope you do at the end of this session, and at least poke around the platform and see what the offerings are. And the key is, yeah. So the first thing, if you wanted to use an Alto IRA, just high level, if you wanted to just open up an Alto IRA account, not going through the platform, but actually doing it on your own, Jimmy shared with me the steps are you just jump on altoira.com, get started. When you put in email and password, you do a little verification, you select Alto IRA and designate it as which kind of IRA you want to open. And it could be for Alto, it's a Roth, traditional, or SEP. And then you will they give you some options on how to fund your account. It can be a rollover, it can be a cash contribution, and then you sign an e-signature and you're done. You have the first main step of opening up your account. You'll be prompted then to fund the account directly. And there are links which Jimmy can provide at the end of this on how to do that. But high level, there's some paperwork, additional paperwork that you have to sign, but otherwise it is as simple as that to actually sign up for your IRA. Again, specific fees are associated with it, and we can have Jimmy explain what those are at the end. But very quickly to open up your IRA account and to fund it. Quickly, as you jump on the Raise Green, for those of you who have invested in Raise Green, this may look familiar. You jump on, you select what you'd like to invest in. The first slide, the first screen it's going to take you to is, well, how would you like to invest? Do you want to invest through an individual account, which is like, Jackie Logan's individual account, or would you like to invest through Alto IRA for the benefit of Jackie Logan? Or would you like to invest in another entity account? So if you were coming in with a different IRA provider, like Millennium Trust or one of the other ones, you would click entity, the right side. But if you are going to do Alto, it's right integrated into the platform, and you just put your clicker in the circle, and then you click next. Next. Then simply you fill out the first time you're investing in your Alto IRA account through Raise Green, you'll just fill out your basic information about who you are. You're going to be the primary contact for all the activity. Next. And then some basic entity information. This is all done online at Raise Green. And next. You'll identify if you are an accredited investor or not. And I actually think, I believe that's the right answer for this, but I will ask Jimmy to talk about investing through your IRA and how you would identify yourself in this. But to be safe, if you put an accredited, I'm not an accredited investor, that is the tightest and most restrictive way you can invest, and it can be updated later. Next. Then it'll ask you a couple of questions. And then, this is specific for whatever offering it is. And then if you're interested in investing through your retirement account, the first time you will just click my retirement account. Next. And you will sign your subscription agreement just like you would for an individual account. But as you will see, the investor name there is your Alto IRA account. And next. And then it just tells you that your transaction is complete. You will click on an embedded link to go right to Alto IRA in order to provide them with some specific instructions. It's all online. And Jimmy, you can provide any additional color on that for when folks do get jump onto Alto. And it's all online and it's done quickly. And the next thing you know, you receive your confirmation and you're done. There's no additional work that needs to be done by you as the investor for this to make this particular transaction. Alto IRA will automatically, once they receive the information, will automatically wire the funds to pay for your investment. And that's it. Very simple. The key thing here for this integration is that in advance of an offering, in it, when an offering is not when coming through Alter IRA and therefore integrated on our platform, if you're coming through another self-directed IRA like Millennium, or Strata, one of the other ones, you will need to basically what the work that goes on is through email, various back and forth with the custodial provider and confirmation of information. There's a lot of work that goes on back and forth to get all the paperwork together, and to get approval for that investment before you make it. Whereas what we do at Raise Green is in advance of an offering going up on our platform, we will reach out to Alto IRA. We will send them documentation. We will see if they will accept that on their platform. And if they do, we will then turn that on Raise Green for that particular issuer. And then you as an Alto IRA investor can go in and directly invest without any pre-approval from Alto IRA or communication with the custodian or anything. It's basically just jump on our platform. If Alto IRA is turned on and allowed, then you don't have to do any additional work before you make that investment related to getting it approved by the custodian. It is already approved. And that cuts down on a tremendous amount of back and forth. It's very seamless. Next. And this is just a quick screenshot of if you jump on Alto IRA, it's a quick screenshot of if you were to open up your investor account, this is where it would start. And if you already have an account, you just click login. And that's the quick overview. I do want to, again, we at Raise Green are recognize that these are financial investments and this is your retirement funds, and investors should be well advised. Self-directed IRAs are, as a general matter, for experienced investors with knowledge about the asset classes they're investing in. Self-directed IRA custodians don't provide specific investment advice. These are specialized IRAs with a lot of moving parts. And just to be clear, we are not recommending any of the custodians listed. Obviously, we have made available Alto IRA on our platform, and we we are very pleased to have an integration with them, and very pleased to make that available to investors on Raise Green. We've actually had a few investors who have added Alto IRA to their suite of self-directed platforms that they work with, and have found this a very convenient way to invest through Raise Green. And next. So hopefully a lot of information, but the high level here, really just the message from everyone from Raise Green to all the loyal folks that are on the call or folks that will listen to this webinar is we want to make sure that you understand and know that investing in offerings on Raise Green is available through your self-directed IRA. We do have an integration with Alto IRA, which makes it super easy to get through the administrative process of making that investment commitment. But as again, we always want our investors to be to make sure that whatever they invest in is right for them personally. And that's where we're at.